Challenging the idea of holding on to cash for extended periods is crucial when striving for financial stability and success. While it may provide a fleeting sense of comfort, the truth is that money held in a savings account gradually loses its value. Inflation silently erodes its purchasing power, rendering it powerless against rising prices and volatile economies. Low interest rates provided by banks fail to keep pace with inflation, causing your money to be caught in a continuous cycle of devaluation. It's time to liberate ourselves from this illusion and explore alternative assets that protect and enhance our financial prosperity. Safe haven currency, Swiss franc. Why is the Swiss franc seen as a stable currency in the global economy? Let me tell you from my own experience of investing in Swiss francs. It occurred during a period characterized by economic difficulties, prompting my search for a safe haven to safeguard my finances.
This is actually very reassuring to know that you have some big powerhouses. However,
for so long time, that means stability, reliability. So you invest in stability and reliability, but
that's when I discovered the Swiss franc and its renowned status as a reliable currency. One thing that stood out to me was the Swiss Central Bank, also known as the Swiss National Bank, SNB. They implement proactive measures to manage the currency's valuation, and the results have been highly effective. This instilled a great deal of confidence in the franc for me, as I was aware of the presence of a well-established system dedicated to preserving its stability. But it's not just about the central bank. Switzerland is renowned for its robust political and financial stability as a nation. That adds another layer of trust to the franc. It's like having a friend who's always got your back, no matter what. Now, let's dive into some historical stuff. The SNB used to maintain a minimum exchange rate floor of 1.20 CHF per euro. It was a measure taken to bolster the franc's value, and this strategy proved effective for a considerable period. However, in 2015, the decision was made to eliminate that floor, resulting in a decline in the franc's value. But guess what? The Swiss franc still held its ground as an important currency in Europe.
Your own currency, like the British, I think is a very important element in that. Now, the Swiss franc has been the hardest currency, the most successful currency for the last, 70 years after the Second World War.
That's when I realized how strong and resilient it was. Do you know what's interesting? Swiss banks offer low interest rates, which attract investments and mortgages from people in countries like Poland and the Baltic nations. This clearly demonstrates the broad appeal of the franc and the confidence people have in entrusting their hard-earned money to it. When it comes to regulations, Switzerland doesn't mess around. They've got institutions like the Swiss Financial Market Supervisory Authority, FINMA, and the SNB keeping a close watch. That gave me peace of mind, knowing that there are rules and institutions in place to ensure the smooth functioning of the financial markets. I also appreciate Switzerland's commitment to transparency. Financial information is readily available in multiple languages, which makes it easy for foreign investors like me to access and understand. It's as if they say, hey, we're open and honest about our financial system. Come on in. Of course, like with any investment, there are risks to consider. The SNB has intervened in prior instances whenever it perceived the franc was overvalued. But it's necessary to evaluate the effectiveness of these measures, especially in light of the economic conditions in Europe. I always do my homework and stay updated on what's happening before making any investment decisions. But you know what? Despite the risks, investing in Swiss francs can be rewarding. The Swiss franc to US dollar exchange rate has exhibited minimal short-term volatility. So, if you're holding American dollars, it's worth considering. And let's not forget those historically low interest rates in Switzerland. They can be a real advantage for investors like us. Now, here's a word of caution. While the Swiss franc is still seen as a safe haven currency, its future outlook is uncertain. The falling exchange rate and those negative interest rates might give us pause. That's why it's crucial to keep an eye on how European economies are doing and watch out for positive developments. Stocks. When exploring investment opportunities, one option that unquestionably stands out is investing in stocks. Rather than simply saving your money in a bank, purchasing stock of a reputable company,
The fact that the Swiss franc is the hardest, most sought for currency in the world makes it actually very difficult for the Swiss industry to export. We're such a small market. We need to export into China, into Asia, into the US and the rest of Europe, which means that we have to compete at every moment with currencies which getting
or even a promising new one, can yield significant value in the long run. The growth of your investment is directly linked to the company's performance and contribution to the overall economy. When you invest in stocks, you become a part owner of the company. It's like being part of the team. I recall when I invested in shares of a technology company that I believed in. It was like I had a personal stake in their success. And you know what? Over time, as the company grew and became more profitable, the value of my investments soared. Experiencing their success and witnessing my money actively working for me, rather than passively sitting in a bank account, was an extraordinary sensation. Now, I won't lie to you, investing in stocks comes with its fair share of risks. I learned that the hard way. There were instances when the market experienced a decline and I witnessed a temporary decrease in the value of my investments. But here's the thing. With careful research and wise decision-making, I managed to weather the storm and come out on top. It's all about staying informed and making calculated moves. What I find appealing about investing in stocks is its reach beyond personal gains. By investing in thriving companies, you will not only reap personal benefits, but also making a valuable contribution to economic growth. I find that pretty amazing. As those companies grow, they create more jobs, drive innovation, and boost prosperity for everyone. It's like being a superhero for the economy, making a real impact with your investments. But here's some advice. Investing in stocks is a long game. It's not about getting rich overnight. It takes patience, knowledge, and long-term perspective. Sure, there will be ups and downs, but if you zoom out and look at the bigger picture, the stock market has shown solid returns over time. I've learned the importance of diversifying my investments and staying up to date with the companies I'm invested in. It's a journey of growth and learning. Bonds and bond index funds.
For themselves. Why should I spend my time and money investing when I could go out and have a good time with the money, or I could go buy Gucci shoes and Versace glasses and all kinds of other stuff that you don't need? And the simple answer is to build your wealth and, more importantly, to buy freedom. Okay.
Bonds have played a crucial role in my financial journey, and I have a few experiences to share. Bonds are similar to loans that individuals provide to the government or companies. What I love about bonds is their stability. When you invest in bonds, you know exactly how much money you can expect to get back. It's like having a reliable friend who always pays you back on time. Regarding bonds, the longer you are willing to lend your money, the typically higher the interest rates tend to be. It's their way of saying, hey, thanks for keeping your money with us for a while. But here's the cool part, you have options. You can choose bonds with different terms based on your own investing goals. If you're looking for a quick cash flow, shorter-term bonds that mature in just a few years might be your go-to choice. Now, let's talk about returns. Bonds may not give you those jaw-dropping roller coaster-like returns you often see with stocks, but they offer something precious, lower risk. The interest rates on bonds can vary depending on the type of bond and the current financial climate. On average, bond yields fall between 1% and 8%. It depends on whether you're investing in government debt, investment-grade corporate bonds, or even high-yield junk bonds. If you're searching for a stable source of income, bonds can be your trusted companion. But wait, there's more. If you're not too keen on investing in individual bonds, I've got another trick for you: bond index funds. These little gems can be in the form of mutual funds or exchange-traded funds, ETFs. They offer a more stable, high-yield investment option. With bond index funds, you spread your risk by investing in a diversified portfolio that tracks a broader bond index benchmark. It's like having a well-balanced meal instead of devouring just one dish. If you found this information helpful and want to dive deeper into the world of investing, make sure to subscribe to our channel, give this video a thumbs up, and share it with your friends who might also benefit from it. Your support means a lot to us. Precious metals and gemstones. In terms of managing your finances, it's worthwhile to contemplate the advantages of investing in precious metals such as gold and silver rather than solely relying on cash savings. I can personally attest to the benefits of this choice. A few years ago, I had a substantial amount of money sitting idle in my bank account, earning minimal interest. It was painful to see my savings stagnate, unrealized. That's when I decided to explore the world of investing in precious metals. I decided to purchase gold and silver, and as time went on, I witnessed their value steadily increase. Seeing my investment grow and serve as a hedge against inflation was remarkable. Unlike the funds stagnating in my bank account with minimal growth, my decision to invest in precious metals proved to be a wise and fulfilling choice. You might think, well, that sounds promising, but are there any alternative options available? Alternative metals like platinum and rhodium are even rarer and highly valuable. Imagine the possibilities that come with investing in these hidden gems. They hold a unique appeal for those seeking to maximize their investment returns. But let's not limit ourselves to gold and silver. Allow me to introduce you to another enticing opportunity: gemstone investments. Diamonds, emeralds, rubies, and sapphires have garnered significant attention among global investors. And here lies the fascinating aspect: they tend to appreciate time. So, rather than letting your money sit idle in a low-yield bank account, consider exploring opportunities for potential wealth creation. Luxury items. Have you ever admired how effortlessly celebrities flaunt their exquisite watches and designer handbags? It's not just about showcasing wealth, it's a savvy investment strategy. I was fascinated when a dear friend of mine acquired an exquisite timepiece and an opulent handbag. Beyond their aesthetics, these items held significant value that grew over time, inspiring me to explore the world of luxury item investments. Luxury items like watches and handbags possess exceptional value beyond their brand names. Their allure lies in their rarity, as luxury brands intentionally limit production. This scarcity drives up their future resale value even years later. It's like owning a piece of art that appreciates as time passes. Consider delving into the captivating world of luxury item investments. Watches and handbags are more than accessories. They are real-time investments with proven profitability. While keeping cash in a bank offers meager returns, luxury items have the potential to appreciate exponentially. Imagine owning a prestigious watch or an exquisite designer handbag. They exude elegance and sophistication while promising future financial gains. Over time, their value can significantly increase, making them valuable additions to your investment portfolio. Investing in luxury items enables you to enter a prestigious market fueled by desirability and scarcity. These items possess timeless appeal, crafted with meticulous attention to detail to maintain enduring value. As demand continues to rise, so does their worth. Instead of allowing your cash to remain idle in a bank account, broaden your investment portfolio by incorporating luxury items. It's a unique opportunity to merge your passion for style with the potential for financial growth. Whether you appreciate horology or have a keen eye for fashion, investing in luxury items is a prudent choice that combines the best of both worlds. Watch the next video to learn more about personal finances.